So we stop at the subsequent measurement. So again, under financial asset fair value to profit or loss, the subsequent measurement is at fair value. Under financial asset under FVOCI, the subsequent measurement is also at fair value. Okay, so here in our investment, equity securities, so we measure initially under profit or loss fair value, subsequently at fair value. And under OCI, the initial measurement is at fair value plus transaction cost, and the subsequent measurement is at fair value. So basically, we need to compute the changes from the fair values. So between the initial measurement and the subsequent measurement. So what if there are changes on the amounts from time to time from the initial measurement and at its subsequent measurement? So how are we going to recognize or analyze, how are we going to recognize or present the difference between the fair values? So here we have this unrealized gain or loss. Okay, so we need to recognize unrealized gain or loss based on the difference between the initial measurement and the subsequent measurement. Okay, but before we proceed with the unrealized gain or loss, how are we going at the end of the financial period or at the reporting period, how are we going to present in the financial statement the investment in equity securities under FBPL and FVOCI. So therefore, under FBPL, the investment is classified as current asset under current asset, while under FVOCI, the investment is classified or presented in the statement of financial position as non-current asset or long-term investment. Okay. So again, because there's an initial and subsequent measurement, there's a possibility that there are changes on the amounts from the fair value initial measurement and the subsequent measurement. So how are we going to recognize or account the difference between the initial measurement and the subsequent measurement? Okay, so we have this unrealized gain or loss. So we have unrealized gain or loss. Unrealized gain if the subsequent measurement is greater than your initial measurement. So since you are the investor here, so if there's an increase from the initial to subsequent, so that's gain on our part because the value of the investment increases. So gitawag na to sa unrealized gain, di ba? So the difference is called unrealized gain. So, di ba, unrealized gain. So unrealized gain is presented in your profit or loss under FBPL and presented under other comprehensive income if the investment is classified as FVOCI. Okay, so how are we going to account for the unrealized gain? So our journal entry, if there is unrealized gain, is we debit since there's an increase in the value of the investment from initial measurement to subsequent measurement. So we debit the trading securities or the financial asset fair value to profit or loss, and we credit unrealized gain. Unrealized gain is presented under other income, diba, in your income statement. Okay, how about under FVOCI? So since there's unrealized gain, there's an increase in the fair value or from the initial measurement to subsequent measurement. So we debit the investment account na FVOCI and we credit unrealized gain gyapon but na OCI. Okay, because the presentation or this unrealized gain is presented separately depending on the classification of the investment in equity securities. Because under FVPL, the unrealized gain is presented in profit or loss or the income statement, while the unrealized gain under FVOCI is presented in other comprehensive income. Okay, so that is other comprehensive income. So just to give you an idea, so si kalahian ni profit or loss or other comprehensive income. So actually your comprehensive income, ang iyang component is you have profit or loss or mo na itong gitawag na income statement. Then you have the other comprehensive income. Then that is your comprehensive income. So add lang ni sila. So si profit or loss die is a component of your comprehensive income, and other comprehensive income is also component of your comprehensive income. So add lang sila. Okay, that is your comprehensive income. Okay, so again, so the presentation of the unrealized gain will depend on the classification of the investment in equity securities. If FBPL presented in profit or loss or income statement, but FVOCI presented in other comprehensive income. Okay, so take note of the difference. So comprehensive income is the sum of your profit or loss income statement and your OCI. Okay, we only have 7 items under OCI. So, 7 items lang ang nadire. The rest of the income and expense account is classified under or presented under profit or loss. So, isa ni siya, FBOCI, unrealized gain, presented in the OCI. Okay, so how about if the subsequent measurement is lower than the initial measurement? So, of course, di ba, natay lugi ta because the value of the investment decreases. So again, because the subsequent measurement is measured at fair value, what if lower compared to the initial measurement? So natay gitawag nga unrealized loss. So unrealized loss, 'di ba? Mas ubos ang subsequent measurement compared to the initial measurement. So how are we going to present to i-present ang unrealized loss? So it will depend on the type or it will depend on the classification of the investment. So you have FBPL and FVOCI. Under FBPL, that is profit or loss, presented in profit or loss, and FVOCI is presented under other comprehensive income. Same kagaya na sa unrealized gain. Okay, so here, so how are we going to journalize the entry if there is unrealized loss? So we debit unrealized loss, that's under profit or loss. Then we credit, we deduct, di ba? We decrease the amount of the investment. Okay, so based on the difference, so that is trading securities are fair value through profit or loss or financial asset FVPL. Then under FVOCI, so same unrealized loss but under OCI and other comprehensive income, and we credit the investment account as FAFVOCI. Okay. So since it is unrealized, di ba? Unrealized. Kapag wala pa na siya na-realize, the question now is, kanus na siya ma-realize? Kanus ma-realize ang gain, kanus ma-realize ang loss. Okay, so when securities is derecognized, so when we say derecognize, it's either you sell the shares, gibaligya nimo imong shares, or manang gitawag nga na-realize siya, gibaligya nimo. So the cumulative unrealized gain or unrealized loss under OCI is recycled too. So probably those under FBPL, so if there's gain or loss on sale of the investment, okay, so gain or loss on sale of investment, so dili na siya ma-recycle. Kani dire, when securities is recognized, sold, realized, cumulative unrealized gain, unrealized loss under OCI is recycled to. So this only refers to unrealized gain, cumulative unrealized gain, unrealized loss under OCI. So kanilang si unrealized loss OCI or unrealized gain OCI. So this only applicable ani. So once ma-realize daw, masold ang investment under FB na classified under FVOCI, those cumulative unrealized gain and unrealized losses are recycled to your retained earnings account. Kumbaga, i-close siya sa imong retained earnings account. Okay, example, the entries, di ba? If na kay unrealized loss, kagaina, di ba, you have debit unrealized loss because unrealized pa na siya, so wala pa na de-recognize ang investment. So wala pa na sold, wala pa na realize. So once it is sold, gibaligya nimo ang shares, di ba? So manang itawag nga na-recognize na siya, na-de-recognize na siya, na-realize na siya, na-sold na siya. What will happen to the cumulative, take note, cumulative unrealized gain or loss recorded under FVOCI? Okay, so it should be recycled to your retained earnings account. So this is what will happen. So since you have debited unrealized loss from the time that you recognize unrealized loss, then we zero out the balance of unrealized loss. So we credit unrealized loss. Then we close it or we recycle it to the retained earnings account. Okay, retained earnings account. So what if unrealized gain? So if you have cumulative unrealized gain, so since we credited unrealized gain account here, diba? We credited here. So, ato siyang close po ng unrealized gain by debiting the unrealized gains, atong gi-transfer lang, gi-recycle lang nato kang retained earnings. So, ang recycle is only applicable for OCI, di ba? It's not applicable for FBPL because once it's not applicable for FBPL. So, it's only applicable for OCI. So, recycle under these equity securities. So, what if you sell the shares at a higher price compared to the katong subsequent measurement nimo? Here, natagitawag nga gain on sale. So, we sell the shares, baligyan nato atong shares. So, unsa to i-compare nga price, di ba? So, the carrying amount now of our shares is the subsequent measurement already. Dili na tong initial measurement. So, our basis now, the carrying amount or the book value of the share is the subsequent measurement already. So, here, so we compared the selling price. If gibaligyan nato 100, tapos 100 per share, tapos ang subsequent measurement niya is 90 per share lang. So, ginansa taog 10 pesos per share. So, how do we account under FBPL the gain on sale? So, gain on sale is presented on the profit or loss. So, presented through profit or loss siya, accounted under profit or loss. So, basically, the entry is since we sell the shares, we receive cash or cash basis siya, then we sell the shares. We credit the share. Diba? Ang share atong gibaligya. The investment account. Then, there's a gain on sale from the investment. So, the gain is presented in your profit or loss. While FVOCI, the retained earnings, if there's gain on sale of securities, how do we account the gain on sale? Diba? So here, we record the gain on sale. We accounted the gain on sale using the retained earnings account. So if you have noticed, diba, same, we receive cash, diba, we sell the investment account. That's why we credit FVOCI. Then the income or the gain on sale, the difference between the selling price and the subsequent measurement is accounted under retained earnings. So that's retained earnings instead of using gain on sale account. So basically, the gain on sale in FVOCI is accounted under retained earnings, while under FBPL, it's accounted under profit or loss. Presented under profit or loss. What if nagka-loss ka, di ba? Mas barato imong baligya compared to your subsequent measurement. So, same lang under FBPL, we recognize the loss and recorded presented in your profit or loss. While on the FVOCI, we account the loss through retained earnings account. Okay, through retained earnings account. Okay, kana lang. So, we debit the retained earnings because nagka-loss ta. Okay, so subject to amortization ba ang equity security? So absolutely no, di ba? Because ang amortization is only applicable for katong bonds nagpautang ta. So since it is shares, investment in shares, so there's no amortization under here, there's no amortization under equity securities. Okay. So before we proceed with investment in bonds, sir, when you say fair value, by the way, di ba? So what do you mean by fair value, di ba? Because the initial measurement of the investment in equity securities, depending on the classification, it's either fair value if FBPL or FVOCI, that's fair value plus transaction cost, and the subsequent measurement is at fair value. So what is fair value? Fair value of an asset is the price that would be received to sell an asset in an orderly transaction between the market participants at the measurement date. So basically, kung pila tong imo nadawat on the sale transaction, on the date of transaction, the date of sale, that's the fair value. But sometimes, di ba, what are the evidences of the fair value? So we have best evidence is hierarchy siya by level. So this in order of priority, that's level 1, level 2, level 3. Level 1, the best evidence of fair value is quoted price. So this is the price of identical assets in an active market. So, identical asset in an active market. If this is not available, then let's proceed with level 2. This is quoted price of similar asset in an active market. And if the two are not available, then we can proceed to the level 3, which is the quoted price of identical and similar asset in an inactive market. So, if you try to picture out that, so pwede ta mo refer ani nga picture, diba? So this is illustration of the best evidences of fair value. Level 1, this is identical asset. So nasa sa mall, Diba? Identical asset in an active market. This is an active market. Okay. Number two, versus merkado. Diba? Similar asset in an active market because daghan gyapon mag-market di ba? Daghan gyapon sa active gyapon ang market. So pila iyang price ana dira. That's the second priority or evidence of fair value. The last is kani PM cent because di ba identical similar pero inactive ang market. So PM cent or PMC is PM ana siya. So that is the illustration of the best evidence of fair value. Okay, so I think that's all on the part of the equity securities. This is just an overview of the equity securities. So again, equity securities can be classified under PFRS 9. It's either unquoted equity securities. You have FVPL and FVOCI. So the transactions here provided down journal entries. You can follow the transactions here. Okay, so how do we account if night transaction regarding these equity securities? And take note also that under FVOCI, once the investment is realized or recognized once sold, diba, the total or the cumulative unrealized gain, unrealized losses of the shares is recycled to your retained earnings account. So recycled to your retained earnings account.